The Crotchety Old Men Podcast is not a registered investment, legal, or tax advisor or a broker-dealer. All investment financial opinions expressed by or on the Crotchety Old Men Podcast are from the personal research and experience of the owner of the site and are intended as educational material. Although best efforts are made to ensure that all information is accurate and up to date, occasionally unintended errors and misprints may occur. Before you invest or make any investment-based decisions, consider your own personal circumstances. You should do your own research and seek advice from a financial professional.
Greetings, and greetings from another happy Thursday with the Crotchety Old Men's Podcast. Well, today brings us another bright, sunny day, and with me in the studio again is my partner in crime, George Crumley. Good morning, George.
Hey, Gary, good morning. Happy Thursday.
Yes, indeed it is. Another wonderful day to be alive. We're going to talk about REITs today, Real Estate Investment Trusts, something that we have some experience in, wouldn't you say, George?
Absolutely. Being a real estate agent and working with investors, you're always looking at multiple ways to invest. So as far as just having maybe dirt, that's what we think about traditionally. And I say dirt, I mean, your regular residential apartments and things like that, and any kind of land kind of development. But I think when you talking about REITs, you talk about a different form of investment in real estate. So yeah, I'm really excited and anxious to start talking about REITs today.
Yeah, well, you know what? Let's give them a little taste of what exactly a REIT is, and then we can kind of open up from there. When you hear the acronym REIT, which is REIT, stands for Real Estate Investment Trust. So obviously the question becomes, well, so what's a real estate investment trust? Well, I'm glad you asked. Real estate investment.
I guess that's because, since we're older, we basically talk that way. We ask our question, we answer the question. That just comes with age.
Exactly. So anyway, a real estate investment trust is companies that own or finance income-producing real estate across a wide sector of different properties. You have your apartment REITs, you have office REITs, self-storage REITs, land REITs, single tenant net lease REITs, which I'm most familiar with. So there's a plethora of choices out there in the marketplace for those investors. And this is for passive investors, wouldn't you say, George?
Absolutely. When I think of a REIT, first thing that comes to mind is a mutual fund. Mm-hmm. So for our audience out, if you're familiar with mutual funds, you're talking about a collection of different funds that create one fund with one amount for investment. So when I think about a REIT, here again, when you talk about real estate, it may be multiple apartments all gathered together to make one stock fund. Is that right? Am I tracking right with that, Gary?
Oh yeah, absolutely. Because it is a stock fund. When you're buying a REIT, you are buying or investing into a security that's traded on the stock exchanges, primarily New York Stock Exchange, and so it gets the same type of benefit from that sort of investment as well. What REITs does, though, however, is it allows anyone to invest in a portfolio of their comfort zone. What I mean by that, if you tend to have better comfort for apartment properties, let's say, particularly since that's a hot topic right now in the last couple of years, multifamily development, multifamily income and revenues has been soaring and moving over to the right of the curve. So an investor who may not have the capability or the capital to invest in a direct ownership of an apartment property can easily, from a passive position, invest into a REIT that invests in apartments. Matter of fact, invest in apartment properties either across the nation or maybe invest in properties in a specific region.
Yeah, exactly. What I find is interesting is the cannabis industry. The fact that folks may not know that you can invest in a REIT that basically invest in warehousing for cannabis. So basically, what you're doing is you may have 10 different manufacturers, each with their own warehouse. As we know, you gotta store the cannabis somewhere. So you've got 10 different companies that have warehouses, located in different cities within the United States. But you have one organization that's pulled them all together for a REIT. So now this is a stock that you can buy over the exchange, which invests in warehousing for cannabis.
Wow, wow. So what I'm hearing you say then, George, is that most REITs they focus on a particular property type, and where that now you have a level of specialization because it sounds like you're saying that okay, you can actually specialize and invest in a REIT that specializes in primarily the warehouses for cannabis versus let's say,
Absolutely.
wow, wow, that's
Absolutely. Yeah. Yeah, absolutely. That's and that's what you want to do, invest in. When you're investing, is you want to stay in particular industries because that's where the growth is. Back to your earlier comments about owning apartment buildings that have REITs, or office buildings, because of the way the industry is growing. uh, these REITs have done very well over the last couple of years because um, of the purchase of these particular buildings and the use of these particular buildings.
oh yeah, no doubt. As a matter of fact, George, historically, REITs have delivered some very competitive total returns based upon the high steady dividend income and long term capital appreciation that REITs offer. When you compare this, and they're low, and I don't want to get too technical with the correlation in comparison to other investments out there, but REITs collectively, because of the risk reward aspect, because it's so diversified, that it certainly kind of minimizes the exposure to risk as opposed to just buying the one-off deals, maybe a one-off apartment property or a one-off cannabis warehouse. Whereas then now you have the leverage of many, I should say many, but several of the same type of properties. So it's certainly from an investment perspective, it gives you a little hedge against risk.
Have you seen over the in this industry in any one particular segment where REITs have really done exceptionally well? I know you just spoke and said they have been as a general rule, but are you seeing any one particular industry where they're doing better than others?
Oh, absolutely. Let's take, for instance, net lease, for instance. Your net lease properties, when I mean by net lease, I'm talking about your Dollar Generals, your Advanced Auto Part properties, your KFCs, your Burger Kings, and Chipotle's, and businesses such as that are doing very, very well. And here's several reasons why. One, they're in a pandemic proof type of industry. What I mean by that? Well, these have been deemed, most of the ones that I rattled off there have been deemed to be essential businesses. So they were not affected or impacted nearly as much as, let's say, for instance, the hospitality industry, such as hotels. And there are hotel REITs and stuff out there. But the single tenant net lease REITs have done extraordinarily well in that, to the same point I mentioned, that they're pandemic proof, if you will. They're business essential. And because of the relatively business model of the net lease industry, which means that there are no landlord responsibilities, it gives the REITs even more leverage to return even higher yields on the investments in those particular properties.
Gary, I'm gonna let you break this down a little bit more for our audience because they may not understand what a net lease is because you just rattle off a bunch of business names, Burger King and Chipotle and some of the others. So if I'm the average listener, I may think that I'm actually investing in these particular companies, but I think I'm going to allow you to break it down a little bit more and let them know they're actually not investing in the company. They're actually investing in the buildings and the land in which they're actually sitting. Am I correct in that
Yeah,
assumption?
yes, you are, George. You know what a net lease investment is. Let me see, and it's plain and simple as this. I'm going to use an example of a Dollar General, but these companies tend to be what we call investment grade. Now, what is investment grade? It just means that they're good credit risk. You're on your low end, your lowest end on an investment grade deal is a triple B. Yeah, triple B, and it's the same ratings that's given to bonds. So When you go from triple B all the way to the triple A's and the A's ratings of companies, it just means that the higher up, the better their credit is. Okay, the stronger their credit is. So an investor could sleep well at night knowing that you got a tenant, such as, let's say, a Dollar General, in your building. And to your point, you're not investing in Dollar General. What you're investing in is that the capability of Dollar General being able to pay the rent for as long as they commit in the lease. So, it's, for our security purposes and risk exposure, it would be better if you had a tenant such as a Dollar General in there as your tenant, who you can, that, well, Dollar General's been around for the past 20 years or so. They're building a lot of stores, and if you look out, you see them advertised on TV, so you rest pretty sure that, yeah, they're going to be around for at least another 5 or 10 years. Versus if it was your local deli down the street, or a donut shop that's from a local bakery, let's say, that's renting that space. Well, you don't know a whole lot about them. There's no way for you to tell whether or not they're making money or not. So as a tenant, that's a little bit riskier. So when you look at net lease, there's 3 components to it. You want a solid tenant, such as I explained, as far as a Dollar General versus your local baker. And then number 2, you want a long-term lease. What's considered long? Basically 10 years. That way you don't have to be concerned about whether or not that rent is going to be steady or not, because it's steady and predictable cash flow to you, the investor. And then lastly, you got a good building. You didn't have to go out and look for the building. Dollar General found the building that they wanted to have built. They built it. They paid all the costs of construction and everything. So now all you have to do is now you invest in that invest in that land and that building. And so, to George, to your point, you own the property, you got a good tenant, and they promise to be there for at least 10 years, and you don't have to pay any money as far as taxes, insurance, or maintenance on the building. That's a single tenant, triple net lease deal.
Wow, that sounds great. So just to kind of sum it up here again for my listeners, basically, if I buy a REIT, I'm not actually investing in the fact that Chipotle or Dollar General is going to be profitable. I'm basically investing in the fact that they're going to pay their rent.
Exactly. Now, that's the best.
That's great to know from an investor perspective, because just on the surface, you may not realize that. And I mean, here again, if I'm going to invest in Chipotle, I'm invested in their stock, and I'm saying basically, are they going to sell enough, dinners to make the profit, to make the projections, and then for their stock to go up. But if I'm investing in a REIT that has that particular entity in their portfolio, I'm just basically making money on the fact that they're going to pay their rent every month. I mean, that's a sweet deal. So yeah, here again, I'm going to stuff a lot of these in my portfolio. It's because here again, it's a safer investment. And anytime we go into investing in the market, we talked about that at one of our other Thursday calls. Promise money. So hey, we want to make sure that this gets as close to promised money as possible. So yeah, I mean, this is great. This is great information, Gary. Really great.
And George, so often in retirement programs such as your 401ks and other alternative investments, many times this REIT market is overlooked, and because of the misunderstanding about them. Anybody can buy them. You just you talk to your financial advisor, or if you're a member of Robinhood or TD American Trade or Morningstar or any of those other platforms out there, you can go out and buy them, and the cost is not nearly as expensive as if you were to go and try to buy a property on your own. Here's a good way with REITs to the liquidity. Let's talk about liquidity, because a lot of times people ask about how do they get their money back, or how soon can you get your money back. And with a REIT, it's almost like it is a stock. So with a REIT, you can get your money back just by selling it on the open market. Isn't that correct?
That's exactly. Yeah, I've got several REITs in my portfolio. I've been watching them grow, and I'm very, very happy with them.
Absolutely. And we're not giving investment advice and all that sort of stuff here, as we always say in our disclaimer. But, I would urge anyone to Google it, go online, educate yourself. Because remember what we always say here on the Crotchety Old Men's Podcast, that the key to success is to continue to educate yourself.
Absolutely. Well, Gary, I've enjoyed this conversation today. As usual, we've provided some pearls of wisdom. We've provided some information on REITs, which hopefully folks will take a look at and go out and do some additional research on to bolster their portfolio. Another avenue of something to invest in. We got a couple of other episodes coming up. You touched a little bit on commercial real estate, and so I'm really excited about that talk. I'm sure that when we get into that, it's going to be really informative because that's probably one of the most overlooked investment opportunities that we miss. Okay, Gary, as usual, that was some really good information. So you want to go ahead and close us out?
Yes, absolutely. And I'm going to close with a quote. People want to take your spot until they realize what it takes to play your position. Until next Thursday. Should I repeat it?
Yeah, go ahead. Go give them that one again, Gary. That was great, man. I wasn't expecting that. Hit us up one more time, man.
Okay, here we go. People want to take your spot until they realize what it takes to play your position.
Wow, that's great, man. Great to go out on it. As usual, peace.
Hi, this is Paul with the Crotchety Old Men. Hey, if you like what you're hearing from the Crotchety Old Men Podcast, hit that subscribe or follow button on Google, Spotify, or iHeartRadio podcasts. You can also send us feedback or topics you would like to hear discussed. Send us your comments to info@thecrotchetyoldmenpodcast.com. Once again, that's info@thecrotchetyoldmenpodcast.com, or visit our website at www.thecrotchetyoldmenpodcast for previous episodes.